So I said, look, if we did that, I don't know, I'd have to marry you. It just doesn't seem right to me. So that's anyways. That's how we got there. Baltic Dry Index, very cool. So let's get through the calendar. Speech, Bank of England, Bank of England, Bank of England, Bank of England. Maybe they're trying to tell us something, huh? Maybe they're trying to tell us something. Okay, great. Yada, yada, yada. GDP out of Japan, of course, they don't have any. Right? Obviously, the big thing today, which is tomorrow for some, the big thing tonight is the RBA meeting minutes. And we're trying to figure out, just, how they're doing, where they are, that kind of thing. Yeah, I mean, getting killed now. But I'd like to see their exports up. If they can dig iron ore and coal out of the ground, China's willing to pay a lot of money for it. So that would benefit them, right? Does that make sense? So if you have any iron ore and coal, then you'll do just fine. The question is, do you actually have any? Okay. So RBA meeting minutes, not a difficult read, very often quite short. Again, this is your China play, and if Aussie recovers, because there's lots of demand for their commodities and prices are high. Well, the cousins next door, New Zealand, they sell commodities too, probably to the same group, the same crew, and the prices are likely high. How much are you willing to pay for lactose? I don't know. I think these prices are intolerable. So, but anyways, right, check out the Fonterra Dairy auction, for example. Global Dairy, I think, isn't it? Global Dairy Trade. Okay. Okay. Oh. Just go home. Go home. Just want to make sure that that was up to date. It looks like it is. Wow. Butter's way down, huh? Cool. Okay. Cheddar. Hey, demand for cheddar is way up, in my opinion. Check this out, though, huh? So you're like, well, is this good? Is this bad? -12 sounds bad, right? Look at the index compared to, 2015, 2016, 2017. Like, holy smokes, look at that. And a little bit of a jump recently, huh? So typically what I do is I look at this and I think New Zealand dollar. Yeah, it's just you, Mark. Okay. Right, Mohammed. It's a supply chain issue is what I'm saying. Okay. But this is actually that this is like, let's say, McDonald's buying bulk, whole milk powder, for example. And it's the price at the auction, so it's not including supply chain issues, right? Like, that's besides the cost of moving this to wherever they need it. Yeah, no, guys, it was everybody. It was everybody. Right? So anyways, by the time you get to a producer price, which is someone that, like McDonald's, that's producing the burger, or in this case, the milkshake, it's their sort of wholesale input costs that we're talking about. This is, so for McDonald's, it would be the cost of the auction, buying the commodity, plus costs associated with bringing it home and storing it, which would be like a carrying cost. And then that would be their input cost. And then the next thing we track is CPI, which would be the cost to the consumer, right? Yeah, HK. Oh man, I want to party in Hong Kong. I heard Vietnam got shut down again. They're going through their fourth wave. But man, I want to go to Hong Kong, Singapore. I'm vaxxed. I'm ready to go. Yeah. Singapore in the summer would be an interesting experience, wouldn't it? I think we should get on a cycle. I think every summer I should go to Hong Kong and every winter I should go to Singapore. And we just make up an excuse to meet as a Forex crew. Okay? And there's always a reason to go to Paris and London. All right. So anyways, track that. Here's one thing. So these are, each one of these is 2 weeks. So we'd have to go out to like, we're talking like this. So don't, hang on. Let's see if I can get this to work. Shh, Daddy's thinking. Okay. Now we're going to have to, no, that's going to be too small. Maybe if I put that over there. Oh, gee whiz, here we go again. I'm trying to see. All right. What we're looking at is this period here from July. You can see it was sort of down, 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 up, 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 down, 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 down. And then mostly up, 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 and then more recently, big up. Okay? So we're kind of looking at that piece. And what month was that? The peak was July 2020. There was a bottom, obviously. March and April and May. Then it went up and then it came down. Okay. So what we're looking at, failure to communicate. What we're looking at is, here's the March low. Then there's a jump till about July, which is here. Okay. And then a higher low near September, which you can see is here. And then up, 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 which is here. Interesting, huh? Okay, so again, this low is March, April, May. March, April, May. The high is like July, August, which is here. And then the resumption of the trend is around September, which is around here. So yeah, it's pretty good. I don't think it'll let me zoom in, actually. No. No. Not bad. A little bit anyways. Okay. HK says, yeah, the Singapore Grand Prix. Yeah, that'd be cool. Too hot though, right? So interesting, right? 4 hour. I guess we're on 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 4 hour. Make that 1 hour. This is 4 hours. Should be 1 hour. Cool. All right. So the funny thing here is nothing's really strong. Pig is waking up. Okay. So one thing that you could do first, because Euro is waking up too, which one's better? Looks like pig. Rotate over to pound dollar. Okay. And really, it's sort of dust and done and dusted. It's done. So it's kind of funny, like if someone's behaving now because of relative strength, there's no why behind what they do. Okay. So nobody really responded. So really, this summer, if we met up in Hong Kong, no one would do anything. Like if I did 1 day's training at the top of the Ritz-Carlton in Kowloon, no one would show up. It's a nice room. It's on the 160th floor, I think, so the view is pretty nice. Maybe I can do a macroeconomics course. We'll do a 1-dayer. No one would do that, huh? Nope. Well, the next one is, right, we got to do South Africa, but I think that one's more, South Africa is more complicated, I think, if I'm going to go there to come back. Yeah, well, Sophie, New York, I keep thinking about it like, yeah, I need to go, and I mean I could just pop onto a plane right now, so get out there, kiss some hands and shake some babies or something. Thanks, inflatable. Awesome. Yeah. Yeah, that's what I thought, Marina. Might have to be next Christmas, not this one coming up. Next one. Oh yeah? What kind of pierogies does she make? Sophie, yeah, Cambridge, right? Yeah. Yeah, I don't think it'll be Boston, but I bitched at Harvard the other day because I keep getting these emails like, oh, commencement, commencement, commencement. I'm like, so I send an email. I'm like, bitch, I already graduated twice. Take me off this stupid list. I'm not interested in commencement for, right? So, anyways, they get back to me and they're like, hey, look, the plan, the word on the street on campus is that we're going to do a special event for those that graduated and didn't get a commencement because of COVID that we're going to do a special one someday out in the future, and you want to stay on the list. So you're getting commencement stuff now, even though you've already graduated, but maybe down the road, right? So I'm like, okay, leave me on the damn list. So that's cool. So that's probably going to be not this summer, next summer. So that'll be interesting because I took my mother and my daughter sat in the afternoon ceremonies listening to the most powerful woman on earth do Donald Trump jokes. So they saw Angela Merkel speak, and I thought that was really cool, especially for my daughter to see Merkel. And then my father and my son attended the morning ceremonies where, you know, they do all the fun speeches, which is really good, you know. So, needless to say, my wife didn't participate because it's like, oh, well, I'll go to your graduate degree ceremony. And, of course, my graduate one was canceled because of COVID. So, you know, she gave up a lot, you know, even more than me because I actually got to go to one. So if I can go through some sort of ceremony again, I don't know what they're going to do, and I don't think it's going to be as cool. But if they did do something next summer, yeah, I'll do Cambridge. Victor says, what about ATL? Yeah, I think if I did a get-together here, we would go to, we'd do it at the Porsche headquarters. But I don't know, too close to home. Okay, so anyways, to me, this is mostly done. And it's May 17th, which sort of how a month comes together dictates how aggressive I am here. And I'm not aggressive here. The entry, if you were going to do it, was a while ago. This is definitely an out. I think we talked about this on Thursday in the swing trading group. I think this was actually one of the trades. And now it's sort of like jam your stop and take a walk. What would you do now? And you're like, huh. Oh, I know one thing I wanted to say. Okay. One of the things, and some people get really fired up about my generality on the topic, but I said, by and large, people didn't need the stimulus checks. And some people are like, you know, some people did. Yeah, I said generally, right? So 90% of Americans didn't lose their job. Okay? Right? 10% did. And what we found is many of the 10% were lower income workers, like the waitress at Applebee's. And of course, if she lost her job because the government said you're not allowed to eat at a restaurant, also her kid wasn't allowed to go to school. So did she need the money to pay rent? Well, the government said you didn't even have to pay your rent. Okay, but you still need money for food and medicine, right? Okay, I got you. Okay, but that's 10%. What about the other 90%, right? All right. And my family even got at least one of the stimulus checks, which is outrageous. But anyway, one of the things I've been saying is I've been using J.P. Morgan as an example, right? J.P. Morgan. I read in one of their data points, I think it was their quarterly earnings report, right? J.P. Morgan, which is one of the largest banks in the world, said deposits went up by 25%. And I said, well, that's amazing because that means that people didn't put it in their retirement account. If they did, it wasn't considered consumption. Remember, stimulus checks were, were supposed to be turned into consumption. So if you put it in your retirement account, it's not consumption. Okay? So all we know is some people would have put it in their in their retirement account or something like that. But this is people that just put it in the bank and did nothing. Okay? It was enough to have deposits go up by 25% year over year. Dude, that is not a small amount of money. Okay? Now you've heard that speech. I saw another one, another data point this weekend. I was reading that there is $170 billion less. So therefore, negative $170 billion in credit card debt. Okay. The government gave people money. A whole bunch of people didn't do anything. It just went into their bank account. They didn't even move the money. So we also know a lot of people would have just bought the stock market with it, put it into their 401k, bought a mutual fund with the free money, right? So we know because the stock market went up, a lot of people just invested it. Some people just received it and didn't do anything. And a whole bunch of people. Now think about it. Some people that needed the money. So we'll go back to the waitress at Applebee's. Okay, she lost her job. She got some help from the government. She's on unemployment. Great. But it's still hard to make ends meet. And her credit card debt has probably gone up. Right? People that lost their jobs and were negatively impacted by COVID, they probably have more credit card debt this year than last year. But as an aggregate, there's $170 billion less credit card debt than last year. Less. It went down as an aggregate, which means a whole bunch of people didn't do anything with the money. It just came in and they didn't even move the money. Some people we knew invested a whole bunch of it, and some of it was like GameStop betting. But, I would have to imagine the vast majority that went to the stock market went through it like mutual funds and stuff. Just people said, you know what, just buy the stock market. So they did that. And a whole bunch of people just paid off their credit card debt. They didn't spend it on anything new. They didn't go to Walmart and buy a TV. They didn't spend it on Amazon. We know a lot of people spent money on Amazon. They didn't, right? They paid down debt because they're like, oh, this free money. Pay off the credit card. Now, the money that my family got, I spent on restaurants and hotels and travel, and I gave it to the good people of Florida. Okay? Cool. There you go, Florida. That's what I did with my money. I put it into the economy. Okay? But a significant amount of people just put it kept it in the account. They didn't do anything with it. A significant amount of people invested it, and a significant amount of people paid down their debt. Because again, after a year of of a shutdown economy, the aggregate of the entire country has less debt. That's a lot of people because we know some people did just spend it all on Amazon, right? We know a lot of people had to use it to make ends meet. But the aggregate is huge. These people didn't use the money. These people just simply converted it from free money into stock ownership, which is how you get rich, by the way. And other people said, you know what? I'm just carrying too much debt. It's a little scary. If I lost my job, this would be a problem. So I'm just going to pay down my debt. So the government gave Visa, MasterCard, and American Express money. It wasn't productive. It didn't increase productivity. This hasn't increased productivity. Okay? This increased investment. Okay? We also know savings gets converted into investment. Okay? So that's, I suppose, okay for our steady state. And then some people actually needed it to survive. But when you look at the aggregate, I mean, I know there's real stories inside, but as an economist, you have to look at the aggregate. And at the aggregate, you know, there wasn't much return on that money. I think if the government had found a better way to say, okay, these 10% of Americans really need this money, okay? Then the other 90% of the money, let's say, if you looked at it that way, everyone that got money that needed it would still have gotten it. The other 90%, what could you have done? Given everybody in America that needed it a brand new laptop, or free Zoom for everybody, or free internet for everybody, or free childcare for everybody? We're talking about trillions of dollars that could have been invested in a different way that would have had a higher return. I mean, it's a lot of money, son. It's a lot, like a gross amount of money. We could have probably invested it in a way that got a better return. And by return, I mean a higher impact on those that needed it, right? So whatever. But I thought that was interesting. I would have thought during a recession where we had 10% unemployment, credit card debt would have gone up. That's what I would have assumed. People are like, well, my cash is a little tight right now, so I'm only going to pay the $20 minimum. Instead, they paid it down. They're like, oh, I got this free money and I don't need it. So I don't need it to pay my rent. I don't need it to buy groceries. You know what? I'll just pay off this credit card. Right? Amazing, isn't it? Okay. Cool. John Baseball, I missed your thought process. Sorry, I was talking. Maybe restate the question and I'll do my best to address it. Okay, cool. So anyways, let's pay attention to this. I find this pretty late. I'd be surprised if you're just doing something now. Okay. You're almost like a day late if you're just setting it up now. I guess, what would you do if you wanted to trade it late? It's a terrible question. The worst question you could possibly ask. Wayne, I missed it, but how do I get in it now? Yeah. So anyways, I don't know. This is, I'm going to even remove this. I just don't know if you're that late, oops, maybe you don't deserve it. Because if you're that late, you're assuming so much new risk that the trade isn't even valid anymore. You know, like for example, so you want to buy it up here, but you're like, you can't buy it up there. It's resistance. It's where bears are going to sell it, right? So you're just like, All right, the next question, 4 hour 21. Yeah, here's the issue right now, guys, just to make it clear. Okay. We're in a fib war zone. Okay. You're at a psych level in a fib war, in a role reversal, and you're like, well, should I buy it off the 21? Well, right now, every single bear on the planet should be selling. If they do, they're going to take it down. If they don't, it's going to have a very small effect and bulls will buy it. So like 4 hour 21, maybe, but not with this kind of price action. It's just not a well thought out, well planned trade. You could, and it might work out, but that's besides the point because bears are selling this and bulls are buying that. So who's going to win? See, I don't know. Okay. I don't know. I think you'd be better off, like the next things are, if it double bottoms, now you got a double bottom play. Okay. Or, kind of thing. Like, you want to trade the extremes, don't you? How much money should you be investing in the middle? And I'd say probably the least amount as possible, right? Oh, we got another guy spamming us. Amazing. He wants us to watch his channel. Wow. Pathetic. Let's go through here. You shorted at the market open. You mean London? You took the London open? Okay. It would be better than buying. Yeah. Okay. Okay. Stalled out near the top. Makes sense. Getting closer and closer and closer to the line in the sand. I drew this months ago. Oh, that's what you mean by market open. Yeah, okay. Yeah. Okay. Does anyone remember what this vertical line is? No, I haven't done exotics yet. No, but I will. Samuel B says Atlanta Fed president says pent-up demand will be upward pressure on prices. Yeah. So last year, nominations were being accepted to get on the Harvard Board of Overseers. And I'm like, oh, I want to be an overseer. I should apply. And the president of the Atlanta Fed applied. And I'm like, wait, he runs a Federal Reserve Bank. Okay, much more attractive than what I do. He's African American. I'm like, okay, the board really likes diversity, so he wins on that one. He's openly gay. I'm like, oh, Harvard, definitely going to like that. So I'm like, how do I compete with this dude? And sure enough, I didn't even apply. This year, the Board of Overseers, there were nominations, and Mark Carney from the Bank of Canada / the Bank of England, he applied to be on the Harvard Board of Overseers, and I'm like, damn it. So I'm not going to apply this year either. I'm just like, oh man. But I'm like, a cis white male, he ain't going to make it. But we'll see. We'll see if he makes it. I didn't know Mark Carney was a Harvard man. I didn't know he was, but cool. Gregory says June target to get out. Oh my God. Okay, you didn't do the work. Ha 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 ha. Right, Gregory. Go look at the 5-year average supply, and you will see seasonality. Also, you want to look at where we are. Okay, now inside of that, but you'll notice some seasonality in the 5-year averages, right? Because what we're talking about is throughout the year, what does the ebb and flow on average? So again, you could look at the sort of an average like this, and then a standard deviation above, a standard deviation below, and you'll get something like that. So where are we, and what does the year look like? And if you'd look at that guys, you would see that I drew this for a very important reason, and you should understand why. If so, you'd probably be making, I don't know, you would impact your thought process on oil. So that's enough. Hint. Wink, wink, nudge, nudge. Okay. Mr. Kennedy, that doesn't sound right. I find oil is very predictable. I'm going to redo the entire macro class this summer, Pete. All right. So Bitcoin. We'll look at screw Bitcoin. All right, let's do gold. Yeah. It's probably going to be closer to 10 or 12 lectures. Yeah. But they're more than an hour each, I think. I think they're closer to 90 minutes per lecture. All right. One comment. Somebody, I think in the swing trading group, we were talking about gold and the South African rand, and I'm like, yeah, that's true, but you probably want to look at South Africa as, many different commodities, not just simply gold. And I was reading over my weekend, again, I clearly do research, right, over the weekend, that it seems that palladium has now, and the associated, metals with that group of metals, has now a larger impact on South Africa than gold. And maybe one of the reasons why is South African gold miners long ago realized that they should just smuggle the gold out of South Africa and sell it for dollars and then pay all their employees in rand. One example of that was in the collapse. This collapse here. So let me see if I can get that. Okay. In this collapse here, okay, gold fell from essentially 2,000 down to 1,000. Okay. Do you know what happened to the profitability of South African gold miners? Profits went up. Now, how's that possible? Fareed, though, that electricity problems in South Africa, is normal. Like, I don't know. It's never not a problem. It's just a characteristic of South Africa. So how is this that gold dropped that much from 2,000 to 1,000, and profits went up. How's that possible, guys? The gold miners, the gold mining companies paid all their workers in rand, and that fell even more. So, right? So anyways, they paid their workers even less. Yep. No, it was actually the other way around, Robin. It was a strong dollar and weak rand. Okay? So put it this way, in terms of dollars, yes, it dropped by 50%, but in rand, in terms of dollars, fell even more. Okay? Pretty amazing, huh? The interesting thing is I remember talking about it at that time. Okay. Do some exotics for y'all, all y'all. Okay, everything just sort of holding. Here's our line, right? Nothing's changed here. There's the line. Not really a strong open. And consolidation is where we're at. What do we know? We know this is the obvious entry for May. We know this is the obvious out for May. And you run the risk of it coming all the way back to 1450. So this is here risk. Okay? And by the way, just to make this point, we talked about 14 being the target months ago. So what you do with that information is, well, that's your alpha, right? What you do with that is, that's your decision-making process, right? Just something to point out a little bit. Maybe maybe it'll have a positive impact or a visualization. Do you think this central pivot was impactful to the trade setup? How about this one? Okay. Yeah, Stephen, I'll go back and do Bitcoin. I didn't do it, but hey, did I tell you out of the 197 people in my MIT class, I was the first one to submit homework? Hey, number 1 out of 200. That ain't bad. And it was all crypto, of course. So anyways, commodities. Wayne, do you end up calling companies up much to see if there's... It's what I do. Yeah, whatever. Like, right, Mr. Kennedy? Do whatever you can to be 5% smarter than everybody else. 5% smarter than your clients, 5% smarter than your competition, and it's all the difference in the world. For example, when it comes to business, you're going to have to decide what kind of business do you want to be. There's the one that offers the absolute cheapest, and then there's the one that provides absolute most value. Okay? So it's like you can, you can make a Rolex watch. Okay? It's a nice watch. It's good. Great. But there are cheaper watches, right? Okay, great. So they're doing some sort of quality, value, prestige, whatever. Now, when it comes to the other choice, okay, there's one company that can provide the product, service, widget, gadget, whatever, the absolute cheapest. And there's absolutely no value to be second cheapest. Because as soon as a rational person finds out that one isn't the cheapest, that they can get it cheaper, there's no way for you to compete because it's all commoditized. So you're like, oh, well, this spoon, I can buy it for 10% cheaper from somebody else. So, like, what are you going to say about it? Well, what? Well, right? There's no value in being second cheapest. It's sort of like in finance, there's no value, or there's very little value being second smartest, or right? So whatever you can do to compete is going to make you more competitive. Shocker. All right. Newsflash. You're like, wow, thank you, Captain Obvious. But imagine, though, Mr. Kennedy, you're having a conversation with a potential investor who is going to invest millions of dollars, or can invest millions of dollars with you. And this is enough money where you're like, dude, I want to close this deal. Now, this dude's got some cash, so he talks to a lot of people, and he has a lot of different, opportunities. And there's a lot of people with good degrees from good schools, and so those without them really have to show why they're smarter or different and more competitive. Maybe they're harder workers. Maybe they'll work for less money, right? So there's the guy with the Harvard degree, and then there's the guy with no degree, and you're like, okay, the no degree might have to work cheaper or have more track record, but like, why, right? And so that it would be better to have the better degree. It just shows something, right? Then you come along and you have this conversation, Mr. Kennedy, with him. And remember, this potential investor has seen many other deals and heard the pitches and like, well, we trade technicals only, or we do this other thing only, or everything's in the price. And someone might actually follow what the Fed says. You, however, do all of that. But you also, in your conversation, you can say, well, you know what? I was talking to an aluminum manufacturer in Michigan the other day, and this is what I learned about their capacity, right? Their factory capacity utilization. And what they said to me when I asked about future orders, future demand, and asked questions about the supply chain. This is what they told me. Okay, so now all of a sudden, you're not waiting to hear aggregate data reported, because that's what everybody else has. Now, most people in the industry, they don't even pay attention to that. So the fact that you do any sort of fundamental analysis and sit down and have a conversation and say, well, I've been watching the factory capacity and utilization statistics here in the United States, in Germany, in Japan. I'm watching all this kind of stuff, and I see it as, it's a way to have a gauge on macroeconomic activity. Okay, that's way beyond. You're already in the top 95 or the top 5%, right? But then you say, you know what? I picked up the phone and I called a factory in Michigan and I talked to somebody there. And this is what they told me. Now it's first-hand alpha. And that potential investor looks at you and say, wait, you actually called the factory because the aggregate data reported by government statistics isn't good enough? You wanted to be a little bit smarter than everybody else? And then you look at them and say, well, 5% smarter might end up being 40% more return or 70% less risk. And all of a sudden, the money is going to you. Not to the lazy Harvard boy, not to the street scrapper that, no, to the one that has all that. Right? You work hard, you analyze hard, and you're 5% special, more special. Right? Like, it's just one of those things, right? Like, it's just better. It's just better. Okay? It's just better. Yeah. Okay? It's just better. You're offering more value. And remember, what we're trying to create is a value proposition. You're creating value and can deliver that value to your customer base. And even if it's only to drop as a story, you probably will attract more investment because you're offering more value. Okay? They'll be dumbfounded. You're like, you picked up the phone? Yeah. 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 Huh? Yeah. I picked up the phone. Cool. Okay? Yeah. Okay, anyways. What do you want to do? Well, it's one of these things, Mr. Kennedy, right? They're like, how do you consistently outperform the market? Well, you could say, well, I don't really know anything about the other market. I don't know what kind of research that they do. But let's say of the ones that actually do fundamental analysis and understand economics. So let's say the other ones that have an economics degree from Harvard, like I do. Okay? Let's say they're in the top 10%. Great. So they understand economics. Where do they get their economic data? Oh, well, the government releases reports every month. So how does the government get the report? Well, the government calls the companies, talks to the senior executives, and gets inside information about future orders, future activity, hiring. And then that gets aggregated and then reported at the end of the period. Okay? So they do that. They follow it. I'm trading it before it's released because I already know. Well, now that would place me higher than the top 10%. So the top 5% get all the money. You have to understand that. Okay? Out of all the hedge funds in the world, okay, the top 25 control, like, I'm going to guess, 80% of the money. There's almost no value in being the 794th largest hedge fund in America. You're like, right? You're just part of the aggregate data, right? The top 25, not the top 25%, the top 25 of the 4,000 control 80% of the money. Okay? So I want you to be that point where not only do you compete with the top 10 best of the profitable currency traders, but that you come in, you're like, whoa, they do the work. I'm just ahead of them. That's where I either can get the same returns with less risk or greater returns with less risk I'm just 2 weeks ahead of everybody. Okay? What do you think the response is to a potential client? Huh? You're like, yeah, these other guys you've been investing in, yeah, they're probably pretty good. Oh, they got great degrees. They understand economics. Great. They actually do the work. Great. They actually have a fundamental bias. Great. Where do they get their data to form this bias? The government reports. Ah, that's why I'm better. I'm 2 weeks ahead of them. By the time they see it, I'm already in it. So they're pretty good. I'm just a little bit better. How much would you like to invest? Okay. However, here's the thing, guys. Here's the thing. Will you do it? Okay. Okay. Yeah. Here's the thing, though. Like, seriously, all right, Mr. Kennedy? Out of everybody listening right now, nobody's going to do it. That's my greatest alpha as a competitor. If we're all out going to try to raise money, I'm the guy that will do it. And it's amazing to me, like just psychologically, right? It's really interesting how even if you tell people the secret, nothing changes, right? Yeah, Mr. Kennedy's like, I did your corporate sales. You can do that. Yeah, you already know these guys, right? Just pick up the phone, call your old clients, and just say, hey, man, I know it's been a few years and stuff, but we used to talk all the time and just catching up. Like, how's business? How's things going? And I might want to come back into the industry. I just want to like, what's going on? What's going on with you guys? How's competition? What's the market like? You know, you can just talk to people. Right? Right, Muhammad. But you'll get it, right? But the thing is, we're all our own people. And if that's not your strength, you have other strengths. The thing is, how many hours this weekend did you spend on Forex? Okay. Okay. I know I did a lot of reading. I know I did a lot of thinking. I had conversations with my wife on macroeconomics. Right. Right. I don't know. Like I spent many hours over the weekend. Right. So it's like, find whatever you do well and do more of it, and then find out the stuff that you don't do so well and try better. Yep. Okay, good. Awesome. Good stuff. Sometimes it's good to know, again, what the competition is doing, if you will. Like everything's a competition, right? Like, Maida did 16 hours. So Nuno's got to catch up. Nuno only did 8. And someone else in the webinar is going, shit, I didn't do anything. Well, you're getting your butt whooped by other people. And you're like, wait, I thought I was better than the best. Best believe I'm the baddest, right? I'm going to be a success in Forex because I just know it. Well, right? Nuno might be whooping your butt. Meanwhile, Maida's whooping Nuno's butt. Now Nuno's like, dang it. So now he's going to double down, right? And that's life. That's life. All right? So anyways, cool. Love it though, man. Light, right? Love it. Just love it. Yeah. And Nuno's like, oh no, shit, Maida's going to take my money. Yeah, you better watch out. All right. So, you know what? I just want to go over the calendar. Bring the calendar back. Bring it back to me. Bring it back. Bring it back. Is it gone? Is that it? No, that's my MIT course. What? I lost my calendar. All right, well, let's redo. Do over. Forex.Today, Forex news calendar. All right, good. Yeah, that's all right, Mohammed. Think of it as a journey. Um, so 5 years ago, I had no formal economic training, which means I was self-taught on fundamental analysis. The only exposure I had to fundamentals was when I prepared to take the Series 3 test. That's an exam done by the CFTC and the NFA. And it sort of opened my eyes. I'm not entirely sure how, but it did. It's just I learned about hedging and options trading and various, if then scenarios. So a typical thing would be a farmer unloads so many bushels of grain at an elevator, and the elevator operator is concerned about a change in prices, whether it's up or down. What strategy would the grain elevator operator use to hedge and all this kind of stuff. And it just sort of made me think, like, if you're worried about prices going up, what do you do? If you're worried about prices are going to go down, what are you going to do? Well, wait, who are we talking about? The farmer or the elevator operator or whatever, right? So you do different things for different reasons. But it didn't say, it didn't define what GDP was. Okay. So if you go all the way back to when I first started trading Forex, I didn't even know there was news. I didn't even know there were economic reports. The first time I ran into NFP, I was surprised. I had to say, what the hell was that? Oh, there was a jobs report. There are reports? Like, no joke. I'm like, there's news? Yeah, so I don't even know if I knew what the central bank was, right? It just wasn't in my wheelhouse. So over a course of 10 or so years, I learned a little bit, but I had to go out and find it and read and think and ponder. I didn't know about yield curve analysis and TED spread analysis and business cycles. I had to learn that. I had to teach myself. And then pretty soon I'm in New York City on a stage teaching people. It's kind of interesting, right? So you can learn all of this for sure. It wasn't until 5 years ago, I decided to take a sabbatical and go get a formal economics education. Cool. So I learned a few more things, right? So you can learn this without the formal education. Absolutely. Okay. Yes, and now I'm teaching the formal side of the education, right? So anybody here probably knows the components of GDP, but I'm trying to make some big connections of the income side of GDP and why does that matter? And then you make a connection of it has to do with the velocity of money. You're like, ooh, what? And if we're going to talk about money supply, you have to understand these things. So GDP from an income, right? And then all that kind of stuff. And then why does money go here and why does money go there? Why does the economy grow and then cool off? What are all these things going on? But that's the formal side, which, I didn't get by being self-taught. Nuno says, yeah, so the formal education to help raise money with investors. Yeah, no one's going to laugh at me, but like MIT asked us to post in a forum, tell us why you're taking this course. And I said, well, now that cryptocurrencies seem to be a legitimate asset class, I'm getting a lot of questions from potential investors, so I thought I'd get, a formal education on the subject. Then I said, but honestly, I just want to put the MIT badge on my LinkedIn profile. And of course, I know that's 90% of everyone's answer. They're just not brave enough to say it. Brutal honesty, I think, is the way to go. And that's true, right? Okay. Well, speculation is an investment. Okay, let's, like the algo, for example. Let's talk about that. If you put your money into a speculation, you've given up cash. Okay? Is that did you convert your cash into consumption, or did you convert your cash into investment? Think about it. Type in a question mark if you're not sure how to answer that. When you convert your cash into speculation, is it a consumption or investment? Aha, thank you. The question mark is the awesome answer. Okay, good. Well, let's define consumption. Okay. You go to the store and you buy a television. What's your return? What's your expected return from that purchase? Oh, thank you, Maida. Thank you. What's your expected return on the investment? Or sorry, the return on the purchase. Your expected return. This should be something that you can calculate. How much money will you get in exchange for giving up cash today? Okay. Quantifiable return. How much expected return, Thiago? Nothing. So you converted cash into some sort of product that you own. Okay, that's consumption. Why did you buy? Okay, now the other side. If you converted $50,000 into a Bitcoin, what was the reason? Was it to have a Bitcoin? Was it to spend the Bitcoin? Or was it because you think it's an asset that will appreciate in value? What was the reasoning? To get a profit. That's the difference. Then you decided, even if it's speculation, it doesn't matter. You decided that this has an intrinsic value higher than what you paid for it. You didn't buy it to use it. You didn't buy it to hang it on your wall. You bought it because you have analyzed it and you have some sort of expected future return. That's an investment. When I buy a house, I can live in it. True. So there's some utility is what we say. Yes, there is some utility. It will also depreciate, so it'll need some future investment. Great. So I do need a place to live, but ultimately I expect it to go up in value. Okay? But Wayne, holding money has a relation to the interest rate as your return. Yeah, but what we're interested in is real returns as well, right, Mohammed? So if you're earning 1% interest rate by holding cash, but you face 2% inflation, you're losing money on real terms. So someone would then want to invest that money. You can buy a stock and have ownership of a company that is valued based on an expected future returns. So therefore it's an investment, right? You could buy a bond, which means you get an income stream and your investment returned to you on a specific time at a specific date. So once again, there's an expected return. If you buy a television, there's no future cash flow and no appreciation of the value of the asset. So therefore, it's consumption. You will consume it. Your TV will die and be thrown into the garbage can one day. If you buy a bond, it too will die one day. That's right. A mortgage is mortal. It will die. But there's a cash flow, a stream of interest payments that you collect over time, plus you get your money back. So you put in $10,000, but you can calculate over the course of 5 years, you'll get your $10,000 back minus the time value of money. But then you have all this cash flow that you received. So it's cash flow in plus cash flow returned minus maybe opportunity cost minus inflation. It'll still have more. So there was a return and therefore it's an investment. Okay. Okay. If you buy rare watches, so right now, high-end watches, like this watch might actually be worth more. I don't think so. But some watches, I was reading in Barron's magazine how some watches have gone up 50% in value over the last 5 years as a way to hedge inflation. So now you have a real asset. You can buy wine futures and you can buy rare wines. So I own wines that I paid, let's say $40 a bottle that are worth now $500 a bottle, right? I made money. Some people buy alcohol, drink it, and now it's worthless. I buy alcohol and can make money on it, which is kind of cool, right? So therefore it's an asset. I didn't consume it. I made investments. I've held wine for over 20 years. So that was probably considered an investment. Okay. I could sell it and get a return. If I decide to drink it, then it gets converted into consumption. Okay. So that's the difference, right? That's right. Art is up. I know a guy who knows a guy. Like I could probably call this dude up and say, hey, I know these people. We should meet up someday. He's in Hong Kong and he runs a hedge fund, but the assets they purchase with their client money is whiskey. Isn't that cool? Yeah, he used to run more of a traditional hedge fund, but for about the last, I think, 8 years out of Hong Kong is where they're domiciled. They just buy rare whiskeys, and they used to go to auctions, but then you had to pay too much, so that he would go to estates and basically, from the grieving widow, buy everything and get a better price. Like, why go to the auction and pay Sotheby's 20%? Just sell it to us for whatever. Okay, so there's interesting, right? It's if you drink the whiskey, it's consumption. If you buy it with the intention of making money, it's investment. Okay. Here's the thing: the difference between poor people and rich people. And don't get all pissed off at the philosophical differences. Just listen to me. Poor people consume. They convert their money into consumption, right? They buy whiskey, they drink it, right? They flush, and it's gone. The money is just flushed down the toilet, okay? A rich person buys whiskey, and it goes up 50%. Now, the rich person might decide, do I drink it now or do I just sell it? Okay? So I have to decide. Okay? So right now, I'm finishing a case of wine. I paid $8 a bottle. Doesn't sound like a lot. I saw the wine at my local grocery store, top shelf, on sale, super sale. This is a 2016. On sale for $19.95. That sounds like a TV show. It might have been 1998 or 1972, whatever, but like almost just under $20. Super sale. And I'm like, I paid $8 a bottle, full price. Okay? 2016. So I'm burning through the case. I think I had 18 bottles at one point and I'm down to 3. And so I'm like, damn it. So I converted it to consumption, but I feel so good because I only paid 8, right? So now, right? So it went from $8 to $30 a bottle. But I suppose I could sell it. I don't know. I don't know what to do with it, but that's the idea. Anyways, guys, you want to own assets that appreciate in value, and even better than that, assets that pay you an income stream. Because one day, because of Forex, you're going to accumulate cash, right? Just piles and piles of ones and zeros everywhere, right? What do you do with all this? It just sits on your desk like an aging Rolex that doesn't fit your wrist very well. Okay, now you got all these assets, right? You have cash as an asset. You have a stupid watch, dumbest thing ever, right? So now what do you do? Convert these things into something useful. Okay? You could take this money, and I thought about doing it actually. You can take this watch, convert it to cash, and then with the cash, invest into a real estate investment trust that pays you 3% a year. Yeah, oh, Robin got it right there. Yeah, buy a REIT. So now you get 3% a year, plus the value of the company probably will slowly grow up over 10 years. And then what do you do with it? You cash out and buy yourself another Rolex. And you're like, what the hell? Another mistake. Okay? But the thing is, it's interesting. After a lifetime of doing this, so if you're in your 20s or 30s, okay, if you do this long enough, you convert cash into something that appreciates in value and gives you more cash. So you give up this $100 bill, okay? You give this $100 bill up for $2 a year or $3 a year. Okay? And you're like, no, I want to spend the $100. What are you going to do with it? I'm going to buy myself a nice car with fancy wheels and a big stereo system. Hey, dude, I did it too. I'm not mocking you. I'm mocking myself. I have a ridiculous car with a stupid stereo. It's so stupid. It's like amazing. The wheels are unbelievably redonkulous. It's a total piece of crap. Total waste of money. Okay? Instead of doing that, okay, you should convert your cash into something that goes up in value and pays you an income stream. And you keep converting cash into income stream. Cash to income stream. Where do you get your cash? You get it from Forex. And in the beginning, just put all your cash into your Forex account. But at some day, you'll realize even trading Forex's work. If you can own enough real estate investment trust, for example, you might be able to live on your 3% return. But the thing is, the stock that you buy that pays these dividends, you might buy it at $10, and in 30 years, it's $40. Plus your income stream. You know, the thing is, you want to get money for nothing and your pips for free. Okay? You'll get there. You'll see. The more you can defer your pleasure, the happier you're going to be. Right? Well, here it says, do you believe cryptos will have the similar? Well, first of all, I'm not educated yet. I've only done 1 week at MIT, so I don't really want to talk about whether I think it's true or not. Here's what it is. It's an asset class. Make money. Should you buy it and hold it forever? You should have did that when it was $50. Okay? So put it this way. If you buy Bitcoin at 50,000 and it goes to 100,000, there's just probably easier ways to make your money than that. You should have bought it at 1,000. Okay? But if you're only going to make 100%, but accept risk that you could lose 10% in a day, then you should just realize there's smarter ways, smarter things to do with your money. Okay? Once again, if you bought Dogecoin at less than a penny, you'd be rich by now, but you'd also be stupid because you paid a penny for something that was worthless. You're like, but it was only a penny. Well, why don't you pay $1 million for a worthless house? It's worth, right? Go to Detroit and find a house that's been burned down. It's in the middle of an old, middle of a ghetto. It's been burned down. Homeless people living in it. Crack addicts living in it. Weeds growing out of it. Holes everywhere. Water damage everywhere. It's like absolutely, totally condemned. And then find the owner and offer them $1 million for it. You're like, well, Wayne, that doesn't make any sense. Well, that's why I didn't buy Dogecoin at 1 penny, because it was too much. But if you think it's an asset that you can make that will appreciate, I don't care if it's speculation or investment. But I'm not going to be the guy that tells you, is it real? Well, if you can buy it and transfer ownership, it's real. Right? And we're getting spammed by yet another person that wants you to watch their YouTube channel. Apparently, they make 100% return within 24 hours. Oh, that's pretty good. How many people here would like an opportunity where you double your money in 1 day? Let's see. Is that what a wealthy person would want? No. So to that person who got blocked, you must be mentally deranged. And I feel sad for how desperate you are. But stop scamming good people. Yeah. I like, though, his first name is Alan. Hey, Alan, so you make 100% return every day, but you can't afford to market your product, your service, your business in a legitimate, honest, meaningful way. Is it because you don't have any money? How funny, huh? Cool. All right, so let's get through this. Cool. All right, let's take a look. Backward looking European GDP? No. Employment, inflation, no, probably not that interesting. It'll be all right, but let's go through here. Okay, all these, I think the biggest thing is like the CPI, the inflation data. It's so hyped. You're going to need to go to battle, okay, with a double-edged sword here. This inflation data, not just for the pound, but just in general, is so hyped now by the media and not very well understood by most. So they will be market movers. But it's not accurate information. So you're going to get volatility. So go into battle carefully, right? Be careful. So yes, the market's going to move. Are they good opportunities? Well, like with pound dollar, the good opportunity was 2 weeks ago. Right? So now just be careful. Like, it might be the thing that moves us to the next level, but realize the money, the trades that we planned for pound dollar, for example, because this is a pound CPI issue, it's already worked out perfectly. Central pivot to R2, perfect. So all this stuff now is riskier pips. Okay? And just be careful. Just be careful. Just be careful. Just be careful. Okay? Wayne, do you set stops with ATR or average daily range? No, under support, David. Just put it under support. Super easy. If you're a buyer, you buy at support, you put your stop below support. Okay? But an average, see, right? So I guess what you're saying, if you had a 50% retracement on the ADR or 50% retracement, and then you buy and the ADR is 100, your stop would be about 50 pips maybe. Yeah, but there's just better ways, like under support, either price support or market support, which would be very similar, but ADRs is, I mean, what you're looking at is average, right? So what happens in an average day? There's just better ways to do it than that. I mean, that's an okay way to do it, but there's just better ways. So if you buy a dip, yeah, just put it below the next support. And if it's too many pips away, use a smaller lot size. Okay? All right. Going out to Thursday. Yeah, just below that mark. Okay, just below that. Okay, Aussie jobs. We missed Wednesday here. Sorry. So going in there, so inflation there. And then, of course, CAD news, meeting minutes. Okay? Again, CPI is either going to be wildly surprising good or disappointing because it's less good, and it could move, it could appreciate, it could depreciate. But once again, USD CAD has already given us the easy pips, exactly the way we planned well in advance. So that part's done. So now it's like dirty money now. It's dirty money. Okay? Right? Tony Montana, he visits his mother and he says, "Ma, this is $1,000. I give you $1,000. And she's like, "Who'd you kill for that?" Right? It's like dirty money. It's filthy, right? So you got to be careful here. Trading CAD because of news, but the obvious, easy, well planned out, thoughtful, honest trade is done. Now you're trying to make money on CPI news out of CAD after the obvious has already happened. It's 30, right? who'd you kill for that money? You're like, well, I almost killed my account. Okay. All right. So anyways, FOMC meeting minutes. There's a good read, right? There's a good read. That's good. Import-export data out of Japan. Uh-huh. Pay attention to that. Aussie jobs. Oh, yeah. People Bank of China. Interest rate decision. Well, the thing is, what can we learn from it? But yeah, the answer is yeah. These are all important. Wednesday is a huge day. Thursday, same old, same old. Okay, good. Good day for swinging. Friday, retail sales. Okay, great. What we're learning is the UK will probably recover fast than Europe. That's fine. Europe is, maybe pulling it together now, which is good. So, yeah, I don't know. So Canadian retail sales, British retail sales, and I think, this other stuff will be met. So, yeah, pound moves the London session, CAD moves the New York session on Friday. Cool. Nice, right? So right now, yen and dollar the weakest. Swissy is neutral. Pound, euro, strong. And this is exactly what we would assume and expect this time of year. Absolutely. And what I mean by a rotation out of yen and dollar, like I've been talking about that for a long time, right? The actual rotation will be the crossover where yen is weak, but dollar is weaker than yen. And they were diverging at the beginning of the year. And now they're converging since April when I said I expect to see a rotation. And they are rotating. They're both weak, but one is becoming weaker than the other. And that's what we were planning on 6 weeks ago. And you can see we're steadily since about April 1st. You can see, right? You can see this is the end of March. So it looks like exactly on schedule. We're getting a rotation. They're both weak, but the weaker is slightly less weak, and the other one is a little more weak. Cool. I don't make this, Robin, so the answer to that is no. Are you guys using this, though? You must be loving it, right? That and the COT? I'm sure you are. Well, you're welcome. All right, would you please click the thumbs up button? I apologize for the internet connection. As soon as this is over, I'm going to go on Amazon and order a timer, and I'm going to have the power strip once a day turn off, turn back on, so that my I bought this amazing setup for my Wi-Fi, but it drops. So I'm going to have it so it shuts down and reboots and always have full speed. Cool. Well, thank you for being here. Thank you for your positive energy. Thank you for your good questions. Thank you for being a client to Trader's Way. And if you haven't done so, can you at least fill out the form and apply for a demo account? Cool, right? Yeah. Well, I'll see you Tuesday and Wednesday and Thursday and Friday. It's going to be a great week. And I know in the next 2 weeks, I'd like to be a real nice seller of dollar. I'd like to be a buyer of the stock market. So, so far, everything's good. So peace on earth. May the pips be with